Hey everyone, ready to dive into some Indian electronics?
Always.
Today we're taking a close look at PG Electroplast Limited.
Oh, interesting.
They're pretty major, making things like AC units and washing machines.
Ah,
For big name brands even.
okay, yeah, I've heard of them.
We've got their Q2 FY25 financials, the investor presentation,
Mm.
and their auditors reports, both standalone and consolidated.
Wow, the full picture.
So let's unpack it all and see what's really happening with PG Electroplast.
Sounds good. Let's dive in.
All right, first off, their consolidated revenue jumped a huge 75%.
It's 75%.
Yeah, just in the first half of FY25.
That's massive.
Especially since they moved their TV business to a joint venture.
Right.
Makes you think their core product business is doing incredibly well.
It does, yeah.
And looking closer, that product business, which is 68% of their revenue,
Okay,
it's the real star here.
makes sense.
Their room AC sales, get this, they're up 143%,
Yeah.
and washing machines are up 41%.
Healthy growth.
Yeah, like they've perfectly matched what consumers want right now.
It is interesting, though, this growth is happening
Yeah.
in a market that's constantly changing, you know?
Oh, for sure.
I wonder if they can keep this up long term.
That's the big question, isn't it?
Definitely.
But speaking of the bigger picture, their subsidiary, PG Technoplast,
Okay.
also had a great run, over INR 1,286.8 crores in revenue.
In the same period.
First half of FY25, yep.
Wow.
And they got their new AC unit in Biwadi going this quarter.
So they're expanding, and it looks like strategically, too, with the AC sales boom.
Exactly. Planning ahead, meeting the demand.
Smart.
All right, let's talk profitability now.
Okay.
Their operating margins are looking really good, better year over year.
Saw that.
They say it's down to cost control and operating leverage.
Ah, yeah.
Break that down for us, for those of us who aren't,
Sure.
financial experts.
Operating leverage, in simple terms,
Yeah.
means they're getting more bang for their buck. As they grow, their fixed costs get spread out over more revenue, leading to bigger profit margins.
So they're not just growing, they're,
Growing smartly.
right, efficiently.
Exactly.
Their EBITDA margin also went up to 9% in Q2 FY25. It was 8.9% same time last year.
Not bad. Not bad.
And they have a solid PEAT margin of 3.1% in Q2.
Up from.
2.7% the year before.
Nice. Those are really promising signs,
Definitely. They're getting more profitable as they grow.
Yeah, investors love to see that.
Absolutely. So we've got these great numbers, but behind the scenes,
Yeah, what's going on?
their capital expenditure for FY25 is right on target.
Interesting.
What does that tell us about how they're thinking about future growth?
Well, it means they're putting their money where their mouth is.
Hmm.
Seriously investing in expansion, not just talking about it.
Right, and this is all backed up by their strong operating cash flow
Right.
and their focus on making their working capital as efficient as possible.
So they're running a tight ship, huh?
Looks like it. And their management team is clearly focused on a few key things.
Like what?
R&D and new products, obviously.
Hmm.
Then boosting capacity across all their product lines.
Okay.
And they're really going all in on their AC and washing machine offerings.
Like they've identified their winners and they're
Yeah.
doubling down.
Absolutely. Makes sense in a market that moves as fast as consumer electronics.
Totally agree. Got to stay ahead of the curve.
Okay, so we've talked about their internal wins, but let's zoom out for a sec.
Okay.
The consumer appliance industry in India is booming right now, isn't it?
It is, yeah.
What's driving that?
Several things. Actually, government initiatives, Make in India, Digital India, are helping, for sure.
Mm-hmm.
We're also seeing more urbanization, a growing middle class with more money, and a lot of product categories still haven't reached a lot of people.
So tons of potential customers.
A huge market for companies like PG Electroplast.
A perfect storm of opportunity almost.
In many ways, yes.
But of course, with fast growth comes challenges.
Oh, absolutely. Competition's tough. Consumer tastes can change quickly.
Right, and navigating regulations can be tricky.
It's not all smooth sailing, that's for sure.
So looking ahead, PG Electroplast has set this ambitious goal.
What goal?
INR 4,250 crores in revenue for FY25.
Wow.
That's a 54.7% jump from FY24.
Ambitious is right. Think they can hit it.
Well, it's bold, especially after shifting the TV business.
Yeah.
But given how they've been performing, their investments, and the market,
It's not impossible.
right, it'll depend on a few things. Execution, cost management,
Right.
and keeping that strong growth going in their key areas.
For sure.
They're also expecting a bit of an increase in their EBITDA margins.
Oh.
Yeah, like they're confident about staying profitable even as they grow.
And what about that big capital expenditure they have planned?
Oh yeah, 350 to 380 crores for FY25.
Clearly not afraid to spend for growth.
Definitely not. Now, before we move on, a couple of interesting things from the reports. First, PG Electroplast used all INR 48,500 lakhs they raised through a qualified institution's placement right on their stated objectives.
Showing they follow through on their plans.
Exactly. And they recently did a stock split, too.
Oh, interesting.
They split each share of INR 10 into 10 shares of INR 1.
Any reason for that?
I'm thinking it's to make the stock more accessible to smaller investors.
Could be, yeah, lower the price per share, get more people buying.
Broaden their investor base.
Smart move, if that's the goal.
Seems like they're being pretty strategic.
Definitely.
All right, let's take a quick pause and recap what we've learned.
Okay, sounds good.
PG Electroplast is seeing huge growth,
Yeah.
driven by their product business, their smart cost management, and their strategic investments.
Right.
They're operating in a booming market, and they've got a clear vision. But, like with any fast-growing company, there are potential problems.
Oh,
We've touched on a few, but I want to dive deeper into those in the next part.
Yeah, I think it's important to look at those potential hurdles.
Absolutely. So stay tuned, because we're going to get into what could derail this success.
I'm ready. It's easy to get caught up in all that growth.
Right.
But like you said, got to think about the bumps in the road too.
Exactly. We were just talking about those potential problems.
Yeah.
You mentioned supply chain disruptions. They've been a real pain for companies lately.
Huge headache.
How could they impact PG Electroplast since they rely so much on manufacturing?
So imagine this.
Okay.
They've ramped up production, right? To meet all that demand for ACs and washing machines. And then suddenly they can't get the parts they need.
Oh, no.
Because of, say, a global chip shortage or a port slowdown.
Or one of those crazy weather events messing up shipping.
Exactly.
So their factories are just sitting there, orders are piling up, they're missing deadlines.
Not good.
Not good at all.
And beyond just those operational issues,
Yeah.
supply chain problems can really make costs go up. Well, if they have to find different suppliers.
Right.
Or pay extra for faster shipping.
That cuts into their profits.
Big time.
So it's a lose-lose situation.
Pretty much.
Delays and higher costs. Yikes.
Managing that supply chain is going to be critical for them.
Especially as they keep growing.
Absolutely. They need to be smart about it.
What do you mean?
Having different suppliers, building good relationships with key partners, maybe even looking at strategic ways to manage their inventory.
To lessen the risk.
Exactly. Okay, so we've got supply chain issues.
Yeah.
You also mentioned shifting consumer demand as a challenge.
Right, but people always need appliances, don't they?
To a point, yes. But what people want is always changing.
Oh, okay.
What's popular now might be outdated tomorrow.
Like those old bulky TVs.
Yeah. Nobody wants those anymore.
So what happens if tastes change and suddenly their energy-efficient washing machines or their fancy AC units aren't so cool anymore?
Well, they could end up with tons of stuff they can't sell.
At the prices they wanted.
Exactly. They might have to offer big discounts.
Which hurts their profits.
Definitely.
And I imagine it takes a while to switch gears in production.
Oh, absolutely.
To make something different.
You can't just change overnight.
There's a lag, and that could be a problem.
Especially if competitors are quicker to adapt.
So staying on top of those changing tastes is important.
Really important, yeah.
Doing market research, maybe even having more flexible manufacturing.
Those could be key.
Wow, I'm seeing how these things could really mess up their plans.
Yeah.
It's like they're walking this tightrope, huge growth, but needing to be super flexible at the same time.
Balancing act, for sure.
To deal with things they can't really control.
Exactly. Lots of companies face that.
Especially in fast-moving industries.
Like consumer electronics.
All right, let's switch gears a bit and talk more about their financials.
Okay.
We talked margins, EBITDA, PAT.
Yeah.
But overall, how would you say their financial health is?
From what we see, they look pretty solid. Good to hear.
Their debt seems manageable, and they're focused on that working capital optimization, right?
Yeah.
Shows they're being careful with their cash flow.
Their balance sheet seems good then.
In good shape, I'd say.
Their net debt-to-equity ratio is 0.21. That's pretty reasonable.
That's good, yeah.
And they have a good return on capital employed, ROCE.
That's it.
27.2%.
Very positive signs.
Those are the things investors look at.
Oh, yeah. To see how strong a company is, how efficient they are.
Low debt to equity means they're not borrowing too much.
Right.
And high ROCE means they're using their money well to make profits,
Exactly. And all this while dealing with the Indian business world.
which can be tough.
For sure. Complex regulations, tough competition.
So them thriving there says a lot.
About their management, their strategy.
Speaking of strategy, their presentation talked about new growth areas.
Yeah, they mentioned that.
They're looking at the ODM space for refrigerators and ceiling fans.
Kind of a natural move, right? Seems like it. They've got the experience with consumer goods,
Yeah.
using that knowledge they're manufacturing to expand into similar stuff.
Makes sense.
But they also mentioned sanitary ware products.
Interesting.
That's a bit more of a jump, isn't it?
It is, yeah.
Makes you think they're not content with just electronics.
Maybe they want to be in different markets too.
Diversify, spread the risk.
Exactly. If one area slows down,
They've got others to fall back on.
smart move, but it comes with its own challenges, of course.
Like what?
They need to really understand those new markets
The consumers, yeah.
and make sure they have the right people and resources to make it work.
So we've covered their financials, their strategy for growth,
Right.
and the potential problems they face.
Mm-hmm.
What stands out to you the most from all this info?
I think what's really impressive is how agile they are,
Meaning.
how they can adapt.
Yeah.
They moved on from the TV business,
Right.
embraced new product types, dealt with a tough market.
All while keeping their finances strong. They're not just sitting around, they're making things happen.
For sure.
Okay, let's talk about their plans for the rest of FY25.
Right.
They've got some ambitious goals.
Their revenue target, for example.
That INR 4,250 crores, it's a stretch.
It is.
But maybe not impossible given their track record and how the market's doing.
Yeah.
They're really counting on their product business to keep performing well.
Oh, well.
They're projecting 78.3% growth in that segment alone.
Wow, that's a lot.
And they're putting a lot into R&D and boosting capacity.
Makes sense with all their expansion plans.
Right. Those investments are going to be super important for them.
Absolutely. Got to have innovation, got to be efficient.
To stay ahead in a market like India.
Yeah.
And they're saying they expect their EBITDA margins to go up a bit.
So they think they can stay profitable even with all this growth?
Like they want to have their cake and eat it too.
Tricky balance.
But it seems to be working for them.
So far, at least.
One thing that really caught my attention was their investment
Would invest.
in a new unit to make air conditioners in Rajasthan.
Big move.
It is. Shows how much they believe in the AC market in India.
Long-term growth potential.
Exactly. Expanding their manufacturing to grab a piece of that.
Smart.
And they're not done yet.
No.
New facilities in Greater Noida, expanding AC capacity in Supa.
Wow. They're not messing around.
Curious move.
Clearly not afraid to invest in the future.
But of course, big investments come with big risks.
Of course.
It's not just about how much money they spend,
Right.
but how well they spend it.
And if those investments actually lead to good results.
Exactly. They need to make sure these expansion plans match up with demand,
Yeah.
that they can handle all the complexity of growing their operations, and that they don't lose the quality and innovation that got them here.
All very important.
It's like they're playing this high-stakes chess game,
How so?
making strategic moves, thinking ahead, but also needing to adapt.
To the constantly changing market.
Right.
That's a great way to put it.
So we've looked at their growth, their strategy, their financials, even the challenges they might run into.
Yep.
But the big question is, can they keep this up?
Right. What does the future hold for PG Electroplast?
Let's try to answer that in our final segment.
Sounds good. I'm ready to talk about that.
Stay tuned, everyone. We're going to look into our crystal ball
Oh, fun.
and see what might be in store for PG Electroplast. Okay, so we've talked about a lot.
A lot.
Their financials are impressive. They've got big plans, their potential problems.
Right.
But can PG Electroplast really keep this going?
Yeah, what does their future actually look like?
It's the big question.
It is.
They've been great at executing and adapting, but things change.
So many factors at play.
Let's break it down. What should we be watching for?
What could really make or break them going forward?
Exactly.
Well, the competition in India is fierce.
Right.
It's a market that never stops, new players popping up all the time.
And the big companies already there are fighting for every customer.
Okay.
Exactly. PG Electroplast can't just relax.
Gotta keep innovating.
Absolutely. Finding ways to stand out.
So it's a constant race to stay relevant, to be the brand people want.
And can't afford, of course.
And then there's the whole regulatory environment.
Oh, yeah. Government policies can really shake things up.
Especially in an industry like this.
Consumer electronics is sensitive to those changes.
Like we said, those Make in India initiatives have helped a lot.
They have.
But what if those policies change?
More new rules pop up.
Could really throw a wrench in their plans, couldn't it?
It's a risk they need to be ready for.
Understanding how things work and maybe even guessing what's coming next.
To minimize those risks.
Okay, so stay competitive, watch the regulations. Anything else?
One more thing, and it's often forgotten.
What's that?
Getting the right people and keeping them.
They're employees.
Yeah. As they grow, they need skilled workers everywhere.
Engineers, designers, marketing, you name it.
Especially with their focus on R&D and new products. They need the best minds to make those innovations happen.
Exactly. And those people are in high demand in India.
Just like everywhere else, really.
They'll need to offer good pay, a good work environment.
A place where people want to be, want to create.
To attract and keep those top performers.
Sounds like a lot to manage.
It is.
But if they can do all that, their future looks pretty good.
It does, yeah.
They're focused on growth, they're financially strong, they're committed to innovation.
It's a good combination.
Paints a picture of a company ready for whatever's next.
For sure.
So to sum it up, PG Electroplast is on a roll.
Definitely on a roll.
But to keep that going, they need to stay flexible, adapt to changes.
Keep a close eye on those key things.
Competition, regulations, talent.
If they can handle those challenges, the payoff could be huge.
Like what?
They could become the leader in the Indian consumer electronics market.
Imagine that.
Maybe even go global.
Wow.
It's all possible.
Well, everyone, that's our deep dive into PG Electroplast Limited.
We've covered a lot.
Their financials, their strategy, the challenges they face.
We looked at the market, what could help them, what could hurt them.
We've tried to give you the full picture.
The good and the bad.
Only time will tell what really happens with PG Electroplast.
That's the truth.
But they're definitely a company to watch.
Their story shows how dynamic the Indian economy is.
All the opportunities for companies that are innovative and ambitious.
Like them.
So, as we wrap up, here's our takeaway. Keep an eye on PG Electroplast.
Their story's not finished yet.
They just might surprise us all with what they do next.
I wouldn't be surprised.
Thanks for joining us on this deep dive.